All right, perfect. All right, and again, I definitely want to thank you guys for coming out on the Saturday, especially. I appreciate it. Uh, I know you probably have a lot better things to do. More importantly, relax on your weekends. Uh, so I appreciate you guys showing up. All right, and like I said, we're going to talk about the difference between wise guy flow, wise guy action, as I or activity, and just news in general. Okay, and like I said, I refer to it more as basically noise. Okay, because all of us as traders, I mean, we're in front of the markets all day long. We have CNBC, now we have social media, Twitter. I mean, you name it, we got access to it. So sometimes it's overwhelming. You think it could be really useful and a great addition into your game plan and your trading perspective, but at the same time, me personally, it's gotten me in a lot of trouble. Okay, to the point where when I notice that I might be creating a bias, okay, and maybe even a contrarian bias based on what I'm hearing uh, on television or reading on Twitter, I try to block that all out. All right. And I mean, think of it logically. Okay. What we're hearing all day long and what we're reading all day long is basically from the traders, from the investors, from the people that this market is designed to beat the living hell out of. Right. I mean, let's be honest here. This market's one big trap for retail traders and investors. All right, that's why a contrarian approach has been successful over time. So, a lot of times, especially in heated markets where it's a bull trend or a correction or a bear market per se, the news, the media, the noise can build you up into a frenzy to where you're making wrong decisions. Okay, we've all been there before. And today in this webinar, I just want to touch on quickly how the wise guy activity can keep me in check from all of that. Um, and that's why, guys, I'm a big proponent of the wise guy flow and trading solely off wise guy flow is because I'm not too disciplined as a trader without it. Okay, I've been there. I've been trading without that wise guy edge, as I like to call it, and I can be all over the place. Like many out there, I have that degenerate gambler blood to where, if I strongly have a bias, I can be really stubborn, and I can really get hurt in this game. And not only that, to the point where just by over trading, and that's a lot of problem amongst traders in general, is that when there's no direction in the market, especially, you tend to overtrade. You get on the bull side, you can't make money, then you get frustrated, so it must be the bearish side where you can make some money, and you get chopped up there as well. All right, so I want to touch quickly on that, just give a little pointers, and then, like I said, I want to take as many questions as possible, not only on this topic, on just in general, any questions you have on wise guy action, as far as trading off it, incorporating it into a style, how it could help you, or any curiosities you may have. All right, so I just want to give a couple examples to start off on the difference that I've experienced between, focusing on wise guy action and the actual news that's taking place. All right. And you got to look, and I stress this a lot, okay? You got to look at the wise guy flow as almost similar to, like, well, it basically is reading the tape. All right. Wise guy flow in simple English is giving you real-time information of how the smart money is aggressively playing in the options market. Okay? That's all it is. We have no idea what are, the motives behind these bets. We have no idea, uh, what's taking place behind the scenes around all these bets that we see. Okay? So you can't I mean, to use this effectively, you can't make more out of the action than what it actually is. And that's all it is. All right, it's like reading the tape. You know, a Lucci, not many people do it, but Lucci still does it. Lucci's a big proponent of reading the options tape. He likes to get a feel for the market, buyers and sellers. And when he sees some buyers coming in and bidding for contracts, calls, whatever you want to call them, he gets a pretty good feel of the strength in that underlying. All right, and it was done more when I got into the business. There were a lot of tape readers, successful tape readers, and now it's almost like a dinosaur. Nobody really likes to do it anymore. But I started initially, like everybody else out there who attempts to utilize this information, okay? It started off with unusual option activity scanners where I would see size trades or unusual trades. I would look to tail that trade and hope to make money. All right, you know the outcome of that. I didn't find success. It was a no-win situation for me. Yeah, I hit a couple of winners, but there was no consistency there. Nothing, even when I had a winning trade, nothing stood out to me. It was almost like, okay, I had a winner, I got lucky there, but these two went to zero and nothing ever came out of them. All right, so I started at that point, but I realized there was a lot more to it than just size trades and unusual trades. I've come to the realization that when players position aggressively in the options market, it would create momentum often off that positioning. Okay, does that make sense? So in other words, if players, sharp players, okay, were sweeping calls in SPY per se, and the action was aggressive, and as I like to call them, sharp, meaning clean cut buy orders, that would create a lot of times upward momentum in SPY. All right, and we had a past webinar on some of the reasons why that happens, and we'll do that webinar again. But that's when light bulbs went off. Okay, so like I said, I started off where I'm not going to name names, but other services out there and other traders out there that focus on unusual activity and size orders. And it got to the point where I almost like to throw the size orders out and not really put too much credibility in them. The size blocks and the unusual blocks. I'm looking more for aggressive orders, meaning the order stressed urgency. A player was more concerned about getting the fill than what price that player was filled at. And the only reason I wanted to focus on that was because when that type of flow, okay, by reading the tape, when I seen that type of flow, a lot of times, quite often actually, it would create momentum off that action over the extreme short term. All right, and then I had to come up with ways of how I could take advantage of that and incorporate it into a style that I felt comfortable with according to, again, what risk I wanted to take on, my account size at the time, many factors, okay? But I had to come up with a game plan and how I could actually take advantage of that because I knew there was something there. All right, and another thing I realized though, and it's the topic of this webinar, is that even without looking at individual trades per se, when you take the whole flow, okay, reading the tape, and you take the whole big picture of what's going on amongst sharp, aggressive players in the option market, there were a lot of instances and a lot of turning points that there were signals of a tell, for example. All right, and a lot of times it was a contrarian view to what we were listening to on CNBC or reading about in articles or listening to or reading on Twitter actually, okay? A lot of times it was the opposite of kind of what we were reading and hearing throughout the media, news and noise as I like to call it. Okay, and I'll give you an example. I guess the greatest example was in the actual markets, the most recent lows, again, the Bazooka Joe lows, as I like to refer to them. There was a perfect example of how, if I was paying attention to what was going on in the news, it would have cost me money and may have even got me in trouble to the point where I would have lost money. And I'll tell you how. Back here in February, okay, you could see we had that, or you all know that the sharp sell-off to the downside. Okay, we had that bounce, and then February looked like that's it. The wheels were coming off again. What was different here as we were heading to test that low, there were aggressive, significant, sharp, bullish orders coming into that weakness. Okay, so basically to paint the picture, markets were selling, CNBC was doom and gloom, Twitter was basically Katie bar the door, the game's over, but Wise Guy Flow was painting a different picture. We saw a $4 million sweep order, meaning a player aggressively was sweeping upside calls in IWM, okay, the small cap ETF. We saw Facebook catch, I think it was $1 million order at the time. Apple, okay, a lot of key names and ETFs were catching bullish orders as the market was looking like it was getting ready to fall off a cliff, and the news was in a frenzy how things were really weak at the time. Okay, so that right there, and I'll be honest with you, I've been solely trading off Wise Guy action for a while now, okay? And even for me, it was tough to get long because as these orders were coming in, it wasn't like the market was already reversing. It was into heavy selling. In other words, the market continued to go lower as these orders kept coming in. It was so interesting to watch, and for some of you who were in the room at the time, it was almost mind-boggling. Again, we would see IWM, it was like a $4 million plus call sweeper that came in, and then the market had, another little flush lower after that. Not much, but drifting lower. And then an Apple buyer came in, and again, the market didn't rage higher. It was still drifting lower. It then got to a point where it reversed hard, closed very nice off the lows, and then that's all she wrote. But on that day, okay, there was another great example of how news could have got me or you guys or anybody into trouble that day. There was, and a lot of the selling had to do with what was going on with oil, okay? And there was news around OPEC, okay? There was a positive tweet, positive meaning positive for oil in the market, sent out by somebody from the Wall Street Journal regarding OPEC at the time. Some of you guys may remember that, okay? Right exactly as these sharp call sweepers are coming in and tattooing upside calls into a sell-off, news gets out about some tweet, again, a reporter from the Wall Street Journal tweeting out something really positive regarding OPEC. But immediately after that tweet, okay, as the market started rebounding, and again, the tape turned totally, the Wise Guy tape turned totally from bearish to bullish instantly. I mean, the tote board went from red to green after those size sweepers, like it was magic, okay? All over CNBC and Twitter, they were saying how that tweet was total bogus, okay? And excuse my French, it was bullshit. Even to the point where the lady herself who sent out that tweet took it down because she was unsure at the time whether that OPEC news was justified or not. All right, and I saw, I wasn't really aware of that because, like I said, especially when in heated moments like that and sell-offs, I try to block out everything that, on the television and Twitter because, usually builds up into a frenzy where it becomes unbearable. but even members of the Steam Room at the time were, posting that news into the chat room. So if I paid attention to, again, the news rather as opposed to the flow, I would have probably sold everything I had on the long side. I may have even looked to short that little bump up in the market, okay? Because if that rebound intraday in the market was off that nonsense OPEC tweet, I mean, that obviously would line up as a decent shorting opportunity, right? That's logic. But the flow was telling me otherwise, okay? Again, there was legitimate buying, one after the other, that followed some of those significant sweepers into the market rebound and telling me that this rally was for real. There were real buyers there, okay? Sharp professionals were aggressively looking to get long this market. So like I said, I mean, I didn't even pay attention to all that noise, that news, for a second, literally. My concentration was on the couple long positions I had, because honestly, the markets, any little rally was a shorting opportunity throughout this whole thrust lower in January into February. So, my focus was on the long positions I had and really trying to get a read off the flow, because it was mind-boggling throughout all this negative news. And this is how these guys work. They were buying it like the best news ever since sliced bread had hit the market. That's how these guys were sweeping call side at the time. So I had totally blocked all that rest of the noise out. I was focused on my long positions. I was taking some profit, getting into some other things that were hitting the top board, and that's all she wrote. But again, 2 instances, literally in the same day, where, and it's from experience, obviously, but I can share that with you. If I would have paid attention to the actual news that was taking place in the markets, I would have got destroyed, okay? Or at the least, it would have cost me a great setup and opportunity, because that's my favorite setup off Wise Guy action. When the flow starts to diverge from the indices and price. Okay, again, in simple English, the markets are still selling, but what changed is there are now buyers, aggressive buying coming in. All right, and that's something that, let's face it, not only retail traders, but many don't have access to. So, and that's the point I try to stress with everybody, especially some of the new subscribers that come in, and are looking for stock picks every day to be generated out of the Wise Guy action. All right, they want to tail just any order that looks decent in size, and it's not about that. Okay, I like to refer to it as an indicator. Lucci mentioned, and it's a great example how it's similar to what he does. It's actually reading the tape. And, we can't expect every single one of you to come in the room and know how to read the tape. But, it really isn't that difficult if you understand what you need to do and what you need to stay away from. Okay, and on top of that, myself and Lucci are constantly throwing in tons of commentary. All right, I mean, Lucci's giving you tick by tick of how he may be trading off that flow, his interpretation. I offer color on almost every order that hits the tape, as well as give you a big picture of what may be going on. All right, so I don't want you to get the wrong impression that you need the ability to just come into the room and read the flow. That's what we're doing for you. All right, I'm just giving you examples of how, when used efficiently, when used properly, I should say, how, this Wise Guy action can be a huge benefit to you. All right, and it's, again, people who misinterpret that information and use it to try to gain something else. Okay, and that something else usually is something that spits out buy and sell recommendations and target prices. All right, another example I want to give you is a recent example of how if you used Wise Guy Flow the wrong way, it would actually cost you money. If it was used the way I stress to you guys every day, every weekend, it would have at the least saved you money. All right, and that was regarding a VXX. What we saw, let me pull this up here, okay, and you could see on April 27th, and this was a Fed day, by the way, okay, we saw somebody come in, sweep multiple exchanges for $2 million plus. So not only aggressive, but a ton of wood, a ton of size behind it, and swept the 527.20 calls. So now let me tell you exactly how I looked at that trade. And it wasn't just that trade. They were sweeping several smaller lots of VXX, but that was the doozy. Okay, that was the confirmation to the rest of the flow that was going on around it. And again, from the Bazooka Joe lows, we see nothing but sharp bullish action. Okay, as this rally got a little longer in the tooth, we started seeing a little bit of put protection coming in, okay, which is normal. All right, people protecting their gains. But as we were getting into earnings season, it was really starting to thin out. All right, there was still some bullish action. There were people rolling up some winning profitable positions, but a lot of the bullish action, which was broader in a sense earlier in the rally, okay, they were just going from sector to sector in size and aggressive. We started to see that fizzle out, thin out is a better word I could use. All right, and then on that day of the Fed, which is right here, there was that VXX action. Now, again, what was interesting about that action, if you were paying attention to the news, the Fed, Twitter noise, and everything else, that Fed news was interpreted as great news. Okay, I don't know if you guys remember, but post-Fed, I think the market was actually weak going into the Fed, or doing not much going into the Fed, and then we rallied hard post-Fed. And I remember mentioning in the room at the time, we saw all this VXX action, come in with that big order and several orders after it, and there wasn't really any bullish action in individual names, in SPY, nothing, no standout call action at all. But the markets were strong that day. Okay, so very easily, I could have just threw that VXX order aside and said, you know what, maybe it's protection, maybe it's a hedge. There's, the markets look great. CNBC is telling me how bullish that Fed statement was. I remember what's his face on the bond floor. The nut job on CNBC, but he was nothing. Even him, who's as negative as they come with the Fed and everything else, they were as bullish as possible. This is nothing but bull news for stocks, blah, blah, blah. On Twitter, they were in bull mode. Everybody was in bull mode, but the actual flow. Okay, and some of you who know me out there, I'm as bullish as it gets, okay? I always try to look at the bullish perspective. I'm always leaning bullish. But when I see the flow telling me and showing me a different picture than what everything out there else is trying to tell me, that's when I take note. All right, so now here's where traders get into trouble. If you come in and you want to tail this VXX order, all right, which is fine. All right, it was size, it was aggressive, there were multiple action in the underlying, meaning VXX. There wasn't much bullish action around it, which confirmed this bet. So let's say you wanted to tail that action. Here's where that action came in. Okay, it was actually weak because, as I mentioned, the market was strong. So it came into weakness. You had a trade out of it. Again, that VXX bet came in. My interpretation was that the short money out there, there's a change now. Okay, whether They're looking for downward pressure, or they're just looking for some turbulence and volatility to come into this market at some point. There's a change. For the first time in this rally, there's a change. All right, so you could have went on and took a trade there, but if you were looking for the market to crash and looking for this VXX to explode to 20, it would have cost you money, and that would have been the wrong thing to do. Again, me personally, I'm not even looking at all these details, $20 strike and all this stuff. It's not even factoring into my game plan. All right, it's not a target price per se. Again, when you use it as an indicator, it's an indicator that there might be possibly some volatility coming into this market. Okay, and that's what we've seen. But if you tailed that VXX order, okay, if you traded it and did what you had to do, you could have made some money off the momentum. But if you held it thinking that it's going to $20 or a market crash is coming, you would have lost money. Okay, so that's the difference between using the alerts as a specific trade or using the alerts to your advantage to allow it to paint a picture for you of what the short money is doing aggressively in the option market. That's simple. And ever since this actual action that took place, again, into market strength, this market's never really been the same. We're not crashing, but there's a lot of chop out there. Okay, so at the least, that action could have saved you a lot of money. Told you, listen, let me trim my longs. We made a lot of money from the lows. Let me take it easy. Maybe I'll sit on a long position here or there, but let me take a step back, a little state of caution, and see how this plays out. Okay, and see how the flow looks after that event. All right, so those are the things, again, how news is totally different than the actual flow, and when there's divergence between the news and the markets and the flow, usually sets up and opens a window for a nice trade. But again, not tailing each and every individual order. That's not the purpose of it. We don't know what this guy, we have no clue what this individual who opened this bet did in the coming days, after this bet was placed. We have no idea. You can look in open interest. You may still see it there, but how do we know he didn't, short VXX up against it to lock in his profits after a move higher? Or buy the opposite, an inverse ETF to hedge against it. We have no idea what's going on behind the scenes. Okay, and yes, it could have been protection or a hedge, but in reality, when you use this information the right way, it really didn't matter. And I'll tell you why. If this was protection or a hedge against volatility, this player still aggressively swept offers to put on a $2 million bet, bullish bet in VXX. So even though it was a hedge, the urgency was still there. The idea behind it was still there. He was worried about something. So that's why you don't have to get wrapped up. And that's the beauty of it. When you use this information the right way, you don't have to get wrapped up into, oh, is it a hedge? Oh, it's not a, and I get that. You guys know, I get that 20 times a day. And I tell people it doesn't matter to me, but I still get it 20 times a day. But when you use it the right way, it's irrelevant. It's irrelevant. Okay, because then we're looking at the flow that comes after that bet to confirm it, and it did exactly that. We started seeing some other bearish leveraged ETF bets come in. The flow overall turned bearish. Okay, so that's how this information should be utilized, and that's how this intel is so much more powerful than actual news. Okay, and I know a lot of people out there, well, not a lot of people, but there's a good group of traders that trade off news wires, and that's great. But again, wise guy action is just as powerful, if not more powerful, than seeing an immediate reaction. Okay, news, every retail trader and their mother could get access to news. You pay for decent news wires, you get the news right in front of you. But there's not too many retail traders focusing on aggressive sweeper action in the markets and using that as an indicator. Everybody else is looking to tail big bets or tail unusual bets and hope they go higher by expiration. Nobody's using it as an indicator or, reading the tape per se. And, that's the reason why, guys, I would say, and depending on the stock, okay, like SPY, an ETF, or Apple or Facebook, you're not going to see an immediate reaction all the time. You'll see it a lot of times, but not all the time. But in names like this Hanesbrand, okay, which I traded on Friday, and let me pull up here so you can see right here. All right, at 11, a little after 11 o'clock, 11:08, a sweeper came in, and another one came in there. Again, that's why I put some smaller. This wasn't even that small, but $150,000 sweep, and then 400,000 plus came in after that. All right, and that's why you see this type of reaction in a lot of, these sharp wise guy sweeps. They're sharp orders. They're aggressive orders. That market maker does not want that order on his books. He'll take our call buys all day long till he turns purple. Right? That's like a bookie taking a degenerate gambler's bets all day long. But if a sharp player comes in and bets 100,000 or 200,000 on the Jets, and he's a sharp player, what happens? They move that line. They move the spread, right? Because now they want to try to attract action on the other side. They want to get that bet off their books. And that's exactly what you see with these things, time and time again. You see the volume come in, sometimes they'll consolidate a little bit before they go, but you see this instant reaction. And then, how long the momentum lasts or how long the move lasts relies on a number of factors, and the overall market being one of them, several factors, more buying coming in and stuff like that. So, but again, when it comes to paying attention to the actual news out there, CNBC noise and Twitter noise, and just paying attention to wise guy flow, it's apples and oranges. It's night and day. And the best trade setups is when the actual wise guy flow diverges and is almost taking the other side of what all that noise is trying to tell you. All right, if you're curious, right now, everybody in this market's trying to pick, are we going to new highs or are we going to test lows? Okay, my interpretation of what wise guy action is telling me is that this market's going to remain choppy. In other words, I don't think it's either of the two right now. It's more of we're going to stay range bound, a lot of choppiness. There's a lot of retail put action out there being placed. They're putting on protection, which is probably the wise thing to do. They're overdoing it a little bit. So we're probably just going to stay choppy, and every flush will eventually get bought, and every rally will get sold. And they'll just eat up premium all day long of people who are betting on new highs or a test of new lows. That's what the flow is signifying to me. All right, so that's why I don't get too wrapped up in making predictions or forecast, or, take into account what the Fed may be doing, because right now, even just by the look of flows, even the sharpest players out there have no idea what the Fed is doing or may do. And I think that's why it's signifying chop, and that's why we are in chop. We're kind of in no man's land. Even the Fed itself is in no man's land. All right, so I hope I got my point across. The news and the flow part's pretty easy to understand, right? One is real time, real money, real players positioning in the option market. Okay, as opposed to news, 90% of the people out there have not a dollar in this game. Okay, all these pundits that come on and these analysts, they're not trading. They're not every day in this market. So what they're telling you absolutely means nothing. Where Wise Guy Action, it's real money being put to work. And giving you an idea, again, of how the sharp professionals may be positioning. Can they be wrong? Of course they can be wrong. The best traders in the world are wrong, often. But you don't need them to be right for this information to be useful to you. You understand? That's the key. That's the thing to understand in all this. You don't need these bets to work out for it to give you that edge you need in this game. When you use it for sentiment, when you use it as an indicator of possible momentum coming into a name, into the underlying, that's where the edge is, and that's where you look to find a way to make profit. Not the actual bet working out. Again, they lose, one, and two, we don't even know if they're bets per se. So why would we pretend and treat them as such? All right, so if you have any questions at all on anything I mentioned here today, or even something I haven't mentioned that you've been curious about, please fire away. All right, what we have is we offer a discount to any of you who have showed up on a Saturday today for this webinar. Again, I appreciate it greatly. Where you only pay $49 for the first month, okay? And then you can renew at $199 per month. So it's a sharp discount, I can show you here, to what we normally charge. All right, it's this coupon code. I'll find a way to put it in here for you guys. You get access to the Steam Room chat. You will have access to private Twitter that's included in it. That's mostly alerts and flow, not as much as the commentary. And, there's some decent traders in the room. You got Lucci. And Lucci uses this information in a different way than I do. Similar but different. I'm day trading a specific action throughout the day. Lucci uses this information more as an indicator of confirmation. All right, and a lot of times, from what I've seen, every time Lucci is looking at something and the Wise Guy Action confirms that, it's been absolutely killer. Short side, long side, in the indices, in ETFs, IBB was a beauty, Netflix, you name it. Okay, it's about having those things line up. So that's the benefit to the actual Steam Room, aside from private Twitter, is that you're getting the commentary and the color on all the action, on all the flow from myself. You're getting Lucci's interpretation, his game plan on how he's looking to trade it. I do a webinar from around 8:30 in the morning to right before the open every single day during the week, going over open interest changes, my game plan, what I'm looking at sentiment-wise, a lot of things. Also, again, the webinar, and then we have twice a week, Tuesdays and Thursdays, Lucci and I both are in the webinar, recapping action, taking questions on on trading, on anything. All right, so with this coupon here, you could go, you could get a month for $49 and then renew it for $199 to test it out. But again, the only thing I stress is if you choose to give this a shot, you have to come in with an open mind and look to take advantage of this information in the way I'm telling you and I'm showing you. If you're trying to get something else out of it, and like I said, involving stock picks and buy and sell recommendations and crystal balls, don't even bother. And let me save you some money in the future. There's no such thing. So save your money. Trust me. There is nothing out there that is like a remote control that's going to guide you in and out of every single trade just by tagging along. No such thing. Even if you're trying to tail a profitable trader, chances are you're not dealing with the same account size, you're not dealing with the same risk parameters or resources, so you're picking and choosing, and the probability of you finding success out of just that is very slim. All right, so that's that. Again, please feel free to ask if you have any questions. I think I was pretty clear, right? Anybody have any questions on anything? Let me see here. What is the coupon code? I have to, let me see if I can do this. How do I, bear with me. Let's see, can I put it here? How do I write? I'm so bad when it comes to this stuff. Hang on. All right, I gotta do, oops, wrong one. All right, I figured it out. I'm so bad when it comes to this technology stuff. All right, there is the link. Let me know. Oh, I sent it, I think, to somebody specifically, and I don't know who I sent it to. I sent the link out there. If you guys having trouble with that link, just hit me up on Twitter or email. You can email Seth, S-E-T-H, at sanglucci.com. Again, that's Seth, S-E-T-H, at sanglucci.com. Any questions on any subscription? I think we're starting to offer yearly discounts as well. So if you have any questions on anything regarding membership, just hit up Seth at Sanglucci, and I'll help you out. He's a cool guy. All right, I saw a question here. What else do you trade besides HBI on Friday? HBI, there was one more that I actually didn't even make money with, but I didn't trade much on Friday. And reason being, who am I talking to there? Rich, I don't know how long you've been in the room. I can recognize you by the Richie Rich name over there, but you would know I'm not a big fan of chasing those gaps. You know, so there was some decent action that came in. Decent. I wouldn't get carried away and say, you know, they were all over it, but there was some decent buying. The problem was it came into names and everything was up 2-3%. And, you know, for what I do, I don't like to day trade that type of stuff because your upside is kind of capped unless this market really goes nuts to the upside. And, you know, as far as when you're chasing a name that's already up, it's, you know, where are you looking to stop yourself out? There's going to be some sort of fade. You know, the market's going to fade at some point. It's going to take everything down with it. So I'm really gun shy. When it comes to buying names that are already in the green significantly. And I've been that way a while. Not much set up Friday as far as a day trade was concerned. Qualcomm, you could have day traded. I did not. That was a nice winner in a name that was up already. Again, the thing was up huge. And they came into strength and a couple times throughout the day, just kept going. What else? ETF action. The only thing in ETF was SPY. I think you could have got a quick trade out of it. It was decent. I didn't. They came in at 11 o'clock on those SPY August and September calls right there. So you could have put on a SPY trade, I guess, and you could have caught this. Only because, again, it was into a little fade. That's why I like it. But again, Friday wasn't my cup of tea. Yeah, Josh was saying Qualcomm was good. Qualcomm was really good. Again, Josh, I didn't trade it because it was up too much already, but that thing just didn't stop throughout the day, and they kept buying it. All right, there was those smaller sweepers that came in throughout the day, which really kept this thing and held this thing strong throughout the whole entire day. Wasn't much give. And you could see, this market was up, raged, the fades were minimal. And then when you reach a point around here, around noon, trades are tough there. This market's up huge. We're in chop mode. Again, as I said during the webinar, this is a market, honestly, when the flow is signaling chop like it has been, you got to look to buy flushes and trade into flushes on the call side and sell these rips. Will these be offered as replays? The sound is breaking out. Really? Man, I don't know what's wrong with the sound. But yeah, they are. What do they offer them on replays? You know what? If you can email, I think they're all these webinars are recorded so that you're able to play them again. But again, shoot you a question, any question regarding any of that stuff, Seth@sanglucci.com or even Greg@sanglucci.com, and they can send you the link for the recording. But all these things are recorded. I made sure I did that because I could have easily forgotten. All right. Oh, sounds perfect. All right. So some of you having trouble for some reason. Again, you could get the recording. Just email Seth or Greg@sanglucci.com. Again, any other questions? Guys, anything. No question is stupid or dumb when it comes to this stuff, okay? Because, again, if you're not familiar with it, when I first started looking at this thing, I mean, there were a ton of questions. And there were a ton of things that, I did that made me look at it the wrong way that I had to take out of the equation. So, this is not something that I just overnight got a total handle on. And at the same time, it's not as complicated as you think. What's complicated is sort of what I do, okay? Reading the overall tape and reading the overall flow and just trying to focus in on the aggressive action, okay? And lining that order up with the rest of the flow. Was it, a position that was rolled? Did he close out something else, open up something else? Does the trade open and so forth? That's the complicated stuff. Once you guys get the most important thing down pat, and that's, again, how to use this information properly. Once you get a handle on that, then it's pretty easy. Like I said, then the light bulbs will go off. But when you're using it the wrong way, it gets frustrating. And one of the most frustrating things that I get, and listen, it's not even tailing action because people are going to do that. I say it till I turn purple in the face. People are still going to tail, size action they see. And when they lose money, blame it on the wise guy action. That's fine. There's nothing I can do about that. I feel better when I tell people that's not the right thing to do, but they're going to do it anyway. But I sense a lot of frustration when the flow is confusing or when the flow changes rapidly from calls, sweeping call side aggressively to now bearish action. But if you look at it as I look at it, okay, an indicator, it makes sense. It makes total sense. All right, as a market goes higher, okay, and the bullish action's coming in, there's going to be bullish action. All right, and that's telling you this rally's still intact. The rally's still intact. things still look bullish, the rally's still intact. Now, up here, okay, at the top of this rally, of course there's going to be bullish action. They're not going to nail the tippy top and come out with what? Put buyers that tell you, or, I mean, call that earlier, right before here, like let's say right before we top out, they're going to come in and just buy puts and tell you sell all your calls. There's no such thing. So there's going to be call buying throughout this whole move. But once you start seeing that change, okay, that change in environment, that change in climate of the flow, like that VXX sweeper, okay, like those inverse ETF bearish sweeps, like some of the aggressive put buying we've seen, you see the gradual change. That's what I mean. You're not going to be able to know a month in advance where this market's going to top out. I mean, you got to be realistic. But, I get that sense from a lot of people. Oh, what happened to these SPY buyers that bought right here? We saw SPY buys are right here. What are they doing? They lost all their money now? Who cares? Who cares? Why are we concerning ourselves with that? All we need to know is this whole rally, wise guy action was nothing but bullish. Everything was status quo, told us to play the long side and milk it for as long as we can. And then things now have changed. It's different. That's all. It's different. It's not telling us we're crashing. It's not telling us we're going to new highs. It's just telling us there's a little uncertainty amongst the short players out there. That's it. Now it's up to you to figure out how to put a trade or not trade, more importantly, off of that. I mean, it's ridiculous, right? I mean, these SPY buyers up here, they started buying SPY down here, all the way up. So again, when you're looking at this stuff the right way, the frustration shouldn't be there. It shouldn't be there. All right. Any other, oops, I don't know what the heck I hit. All right, let me see. Any other, okay. Joshua was saying Sang Lucci YouTube, you could get these webinars on. Thank you, Joshua. I knew there was a way out there. So Sang Lucci on YouTube, you could get it off there. Somebody mentioned, an inverse ETF as well. Let me see here. Okay. Wen is saying, how do you on Friday, Walmart 527 put big bet ass size? How do I interpret it? Honestly, I don't know. There's no interpretation to me. I mean, interpretation is the stock gapped up on great earnings. Maybe it's somebody long the name looking to protect their profits. I mean, that's a big move after earnings. I remember there was put buying from here into earnings. But again, it was earnings related. So the order, when the order doesn't really stick out to me, like I said, the overall flow, what it's telling me right now is that we are in chop. Okay? So what that means to me as a day trader, I want to focus on buying stuff into weakness and looking to sell squeezes. You understand? So when this market is getting overheated to the put side intraday or overheated to the downside intraday, and there's some call sweepers that come in, I'm looking to get involved in some of that action and then look for a bounce to sell into. Now, if I was focusing on the short side, I would look for rips to sell into. Same thing, but just the opposite, obviously. If I was swing trading, that's where things get tough now. Honestly, if I was swing trading, there's a good possibility that I would just be sitting on my hands doing nothing. And there's nothing wrong with that. As a swing trader, anytime we were in markets like this, I would sit on my hands doing nothing. I look to make money when the trend is behind me. The flow is behind me as a swing trader. I look to make money when everything was lining up. You need everything to line up as a swing trader. You really do, especially in this market. This is not your normal market per se, okay? This is not the 2009 to 2012, 13 rally here. That's long gone. I mean, you look at this market and you see I think this is the longest we've gone without breaking to new highs and having, I think, what is it, a 20% pullback in the same amount of time. This is the longest span where this market's really done nothing. The ranges are there, and that's what you have to look to take advantage of, right? We have this sell-off, we come back up here, we have this sell-off, we come back up here, but we're not breaking in either direction. So the breakout trade is dead right now, and it's been that way for a while. So it's kind of, and that's what we've seen in the wise guy action as well. It's kind of what we're trained and really don't feel good about, and that's buying weakness, selling strength, right? Everybody wants to own a stock that's going higher. Everybody. They never want to get in when it's falling, right? When a stock is selling, they never want to get in. Yeah, this is me. Don't catch the falling knife, all those traditional things. But that's where we are right now. So as a swing trader, I would, honestly myself, I would sit on my hands and do nothing and wait, because there'll be some resolution to this. Eventually there'll be some resolution to this. Who knows how long, but I don't think it'll be that long, whether we resolve to the upside or downside. But the only other thing I would suggest swing trading is, again, buying after flushes and staying away from buying into rallies. What do I mean by that? Let's take Netflix for example. There hasn't been any sharp repeat buying in individual names throughout this whole chop. Really hasn't been much. One of the few is Netflix. And the only reason I liked this thing, there was a couple things I liked. I actually day traded this name twice off the action, but there was something that was really positive and something that took a little of the sizzle away, and I'll tell you what it was. They bought Netflix on this day, right here. That's where they came in and they were aggressively sweeping August and September calls. All right? So right over here on this day into weakness, when everybody was calling basically for a breakdown in Netflix. There were people I know who were shorting Netflix. Okay, so they came in and started sweeping August and September calls. And we're talking about $2 million sweeps there. So right into the weakness that day. Now, that's something that if I had to swing, I would maybe take a small position on. Okay, I wouldn't go crazy. And one, because they're out in August and September, so they're telling you right there, they're really trying to avoid this chop we're in, right? Otherwise, they would have went to, what, more like July? June, July? So they went out August and September telling you they're worried about this chop. They're really bullish, but they're worried about this chop we're in. But if I had to swing something, that's what I would look for. Where they come into weakness, and then I'll look to sell. I would have probably been out of it by now, but I would look to sell this bounce or this bounce. You know what I mean? For a couple of days. That's the only thing I would look to do in this market as far as swing trading. I would not buy this. I would not. Even if we didn't see any of this action and the initial action in Netflix was here in this market, I wouldn't swing it. Just because it's, overextended a bit. It's already rallied. And, you buy rallies in this market and you're going to get your rear end handed to you. Because we sell off, they're going to take Netflix down with it. All right, so that's the only advice I could give. Swing trading is hard right now. And guys, trust me, it's everybody. Anybody swing trading right now, they're not making money. Okay? That's the only way. What I've just shown you right here is the only way to swing trade on the long side. Even on the short side, it's impossible. But on the long side, this is the only way that you could do it and find some success. And it's so hard to do. It's so hard to do. In hindsight, yeah, this Netflix trade was a beauty. But try doing it that day where this thing's down $2.50 on high volume with negative news around it. Okay, another example of how news is really useless, by the way, which was the actual topic of this webinar. All right, what else do we got here? This market is deadly. Yeah, Rich, it's deadly if you're trying to do more than it's allowing you to do. There's no doubt. This market is really, it's because it's going to hammer both sides. Even the shorts. That's why I can't see this market flushing right now. I really can't. The flow is signifying chop, and there's a lot of protection out there being put on. What I mean by that, a lot of people are very cautious and using puts to protect anything long they have. And usually when protection, all right, puts in general is in high demand, and you can see that off put to call indicators, usually the market doesn't fall apart. So the only way to trade this market successfully is to utilize the ranges, Rich. There are big ranges out there. Okay? And, day trading is the easiest way to do it. Swing trading, like I said, is really hard. But, for day trading, if you stay disciplined and do what you're supposed to do, you're not going to get beat up. At the least, you're not going to get beat up. You may not get rich, but you're not going to get beat up. If you focus your energy on, looking at aggressive call buying or, just call buying in general into weakness, there's a good chance you're going to see that bounce to sell into. And if not, you're stopping yourself out to the downside. So at least you're not getting manhandled here. Where, swing trading, if you're short, you walk into yesterday and you have a gap up and it's a disaster. What else we got here? What do you think about SPY orders from yesterday? Again, what do I think about it? It's out in August and September 1. So, it doesn't take away anything from being in chop right now, right? We've seen a lot of call buying. Any decent call buying has been out in September. I mean, Netflix, this example, again, September. So it's not really painting much of a different picture. And that player sold puts, out of the money puts as well. So, it looked like a good trade to me. He's selling puts to finance, out of the money cheapies. So it really doesn't signify anything, that's going to help us in any way right now. I'd much rather see them sweep July in the money calls. That would get my attention much more than September lottos. I don't care about the dollar amount. That's irrelevant to me. Well, not irrelevant, but, I want to see even half of that dollar amount, a quarter of that dollar amount in SPY June or July 206 calls and have them sweep that aggressively. That would get my attention. And, in the bull flow supporting that around it in individual names. I mean, right now, this market there's no theme out there amongst wise guy action, right? They started dip buying a little retail, but there's no theme, right? They're not focusing on energy or focusing on tech. They're on the long side. So when you see that, it's chop. When you see that, usually signifies chop. All right, what do we have? Josh was saying same as what was that, ST? Oh yeah, STX. Joshua, that's what I do, Josh. That's what I do. Okay, yeah, it was a couple of days ago. I don't know if I could go that back, but I look to take advantage of the intraday momentum of these bets. And when we're in a tough market like this, I try not to get too greedy. And I'm not really concerned about how big my profits are right now. That's the last thing I'm concerned about. I'm looking to grind it out, make a little bit of money, and survive this chop. Okay? Because when a sweet spot lines up, that's when we can make some decent hits. You can't treat every environment the same. But that's exactly what I look to do. All right? Because that's where I feel the real edge is off this information, is intraday. And there are many reasons, behind that. That's a whole webinar in itself. But this right here. I look to get in right around the reference price. Sometimes I got to pay a little higher. I have no problem with that. When the action goes off here, I don't want to pay up here. And I look to sell this move. When we're in bull trending markets and the flow confirms, a bullish theme and everything lined up, I'll give this a longer leash and raise my stop. Sometimes I raise my stop to break even or trail it and look to catch a bigger move and a longer move throughout the day. But right now, this is all I want. I want this, and thank you very much, and that's it. Even like the SPY, and that's what you should ask yourself. And if you're unsure and you're in the room, ask me. That's what I'm there for. Will that order create any momentum in the underlying? Okay, now if you're playing the calls, it's got to be, will that create enough momentum for my calls to go higher? That's why I trade the stock. I'm day trading stock. I'm not day trading options. That's another thing, by the way, guys, I get a kick out of, is a lot of times people ask, they're telling the option orders as stock picks, and I don't even trade options. So basically, you have the dude who's telling you about this stuff, and he's not even tailing the option orders. He's not even tailing options, period. And you think, you're going to find success doing it? So, that's one of the reasons why I day trade the stock. I know I can get that momentum 7.5 to 8 out of 10 times. And you can make decent money doing that, guys. Decent money if you can do it. Some people can't, and that's why there are other ways. All right, what else we got? Oliver is saying, long-term thinking, there will be a period when people move out of the stock market into safer things like bonds, e-liquid stocks. Won't it be hard when there's no flow? There's always flow. And that's another thing, Oliver, why I focus on just call action. Some of you may not realize this. I do not short. I'm not tailing any put action. All right? Why? There's more than enough call action for me. More than enough. And when there are days where there's not any call action, okay, when there are days that sweepers aren't sweeping call side, that tells me I shouldn't be playing anyhow. So it keeps me in check. There was a period in 2008 where there was really no call action. Okay? That's a once in a lifetime event, not lifetime, but once in a generation type event. We could sure see something similar to it. And again, I like to say, if we see another 2008, all right, in the near term, the stock market and trading is the least of your worries. Trust me. It'll be Armageddon out there. All right, so there's always flow. Again, think about how many contracts are traded each and every day. Do you know how many call buyers and put buyers there are out there every day? 99% of that information is totally useless. Totally useless. All right, but flow, especially for sentiment, it's always going to be valuable. There's always going to be something coming out of flow to help you get a picture of what's going on amongst the sharp money out there. Always. Not each and every minute of the day, and you can't expect that either. But days where the action doesn't suit your trading style, for me, if there's no aggressive call sweepers, I'm not playing. That's my discipline. And that's why I do what I do. And that's why I focus on just wise guy activity, because it keeps me disciplined. Otherwise, do you know what the hell I'd be doing out there on my own right now? You know, the more you know in this game, the more it hurts you. I'm in this game 20 plus years. Okay, I've tried you name it on the technical side, fundamentals, you name it. I've looked at it. I'd be all over the place in this market. And you see that right now with traders. They're all over the place. They don't know what the hell to do. They short, they're getting squeezed, they go long, there's a flush. So, that's why I focus and solely focus on this and nothing else. It keeps me in check. Otherwise, I'd be a lost cause. All right, what else? Joshua, does Wise Guy Flow come with Twitter fee? Yes. Well, you can get either, put it this way, if you just want to get a feel for just the flow, you could do private Twitter and it's cheaper. But in reality, this $49 is cheaper than anything for the first month. So there's no reason to just go to private Twitter. Private Twitter is included with any chat subscription. So you get both. Okay? But after this month is up, we had spun off now private Twitter into its own entity. What is it? $59 a month for just private Twitter. But you basically have to make sure you have your own trading style and know how you're going to use it as an indicator if you're just going to use private Twitter. Okay, you're not going to get my color and commentary, thoroughly in depth. You're not going to get the webinars. You're not going to get the Lucci setups. And you know what I mean? There's a lot that comes with the chat. It's not just about the flow. Like I said, Lucci uses this flow in a different way than I do. But when it lines up with what he does, it's incredible. And a lot of the successful traders in the room, some aren't as vocal as others, some of the guys I've worked closely with use this information differently than I do, but basically the same presence as an indicator. Period. Sentiment, and to confirm what they're looking at. All right, so sentiment, like I've explained to you guys, and a confirmation indicator is sort of what Lucci uses it as. Here's a perfect example. You're looking at Netflix, right? You did your homework the night before and you say, you know what? If there's a dip in Netflix, I really like this thing. It's tough though, tough setup, blah, blah, blah. Then sharp sweepers come into Netflix, into that sell-off. There's your confirmation. So, again, a couple of guys I know personally, so I've seen it firsthand. They're very successful in what they do, but they use the wise guy action only as confirmation to what they're looking at solely. So they're not doing what I do where I see HBI Steam and I'm looking to day trade at. They already have their names. They're waiting for the sweepers to confirm what they already see. Right? Let's say Facebook. Monday morning, they're looking for an entry. They're waiting on sweepers for an entry. And why did they do that? Because, again, you may think I'm biased. There's no other momentum indicator in real time out there on the planet that can do what this does. Nothing. There's no indicator. You name an indicator, okay, intraday, in real time, that 75% of the time, again, that's a number off the top of my head, you're going to see a reaction when that indicator signals. Which one? Sometimes they do, right? Sometimes they'll bounce off a moving average or a Fibonacci or a MACD crossover or whatever you guys want to call it. But anytime there's a sharp sweeper in the name, there's instant momentum. Instant. The sharper the sweep, the stronger the momentum. When Netflix caught those August, September sweepers, there was instant momentum. The market was really dead that day. Shit. Netflix was down doing nothing that day. And what happened? August, September sweepers, multiple sweepers came in. I actually traded it, so I know firsthand. And the stock had a nice push higher. Okay, it didn't rocket $5 that day, but it ran $1. What other indicator, I don't know any. Like I said, I'm in this game a long time. If you know an indicator that is anything remotely close to as efficient in real time, please tell me. Please share it with me. And you, again, guys, you'll see it firsthand. If you come in the room, pull up a 1-minute chart or whatever, intraday chart, okay, and watch the tote board. And when you see my commentary after sweepers come in and I say aggressive action in HBI, sweeper action, that was a real sharp order in HBI. Just, it's right in front of you guys. You'll see this. You'll see the volume start to pick up. You'll see the names start to strengthen. And again, how far and how strong that may be, how long the move lasts, that relies on a number of other factors we can't get into right now. We'll be here all day long. We're already running over the hour. But, whether more buying comes in, whether the market falls apart, whether the market strengthens, how the flow is, there's a million different things. All right, did I miss anybody's question? I apologize if I did, because I keep scrolling. I go back to the same things here. Loud and clear. I think I touched on all the important ones. What about a gap up with no news on Netflix? What's that mean, Rich? Yes, you mean on Friday? Will these be offered as replay? Yep, Sanglucci YouTube, or you can email, like I said, Seth or Greg at sanglucci.com. with any membership questions, anything about the webinar and so forth. All right, guys, I ran late. Sorry, I took a while here. I get wrapped up into this. And I love talking about this because, like I said, besides colleagues of mine and clients of mine prior to this, on Twitter, you can't discuss this in depth. And that's why I was a big proponent of webinars included in the membership every morning, twice after market during the week. So, I can share with what I know and help you get a better idea of how you guys can incorporate this into your own style and find it useful. All right. So again, I put the link out there. If somehow you lose the link or whatever the case, hit me up on Twitter or email anybody at Sanglucci and they'll help you out. All right, and the only thing, like I said, if you do sign up for the first month, $49, it's cheap. Just come in with an open mind, okay, and look for what I just described in this webinar. You know what I mean? Take a step back. You don't have to trade instantly. Get a feel for the action, my commentary. Look at intraday charts to see the momentum develop and why they develop. Why some momentum sustains longer than others. This is all stuff you'll get a feel for rather quickly if you keep an open mind to all this information. All right, but thanks a lot for coming, guys. Have a fantastic weekend. All right, I'll see you. Some of you guys are already members. I'll see you guys Monday morning. We'll find a way to get through some more of this chop for the meantime. All right, have a fantastic weekend, guys.